What's up, everybody? Jonathan Rose here. Today we're going to be talking about oil, black gold. And I'm bullish. Look at the price action of oil. In front of you, I have CL. Trading 51, fell down to 42, rallied right back up to 51, 52. Here's why I think oil is going higher. A few different reasons. Well, first of all, whenever I'm doing technical analysis, I want to look at the most amount of data first. Too many people are dependent on technical analysis alone. Take a step back. We want the most amount of data. CL weekly, 200 period moving average, 52.27. This is a massive number. I'm a big believer that markets don't like to stay around big numbers. When they get to them, they decide on which way they want to go, and then they get away from those big numbers. Right here, I think oil is not going to stay by this 200 period moving average on a weekly. For my technicians out there, if we open this up on a weekly, I don't know about you guys, but as far as head and shoulders go, this kind of fits the stereotypical definition. Now, is this alone enough to make a trade? Not for me, but when enough people on the street follow things like this, there is definitely like that self-fulfilling prophecy. So what I want to see on head and shoulders is what we have right here is steepness. Okay? Down, up, right shoulder. We want that right shoulder to stay above the left shoulder. Key. But that alone, that's not enough. What else can we look at? Here's something that's interesting. All I did here was look at CL oil from West Texas. BZ is oil from the European Sea. Remember, CL WTI is US oil. What I did here is I just overlapped it with the S&P futures. Now, these are not historically lockstep correlated. If I put it on a weekly, they're not. But if we look on a short-term chart, if we just look back 20 days, look at the behavior between the relationship between CL in the light blue and the S&Ps in the purple. As the S&Ps fell, so did oil. As the S&P found a bottom, found some support and rallied, hey, so did oil. Therefore, we can probably infer that if the S&Ps continue to rally, oil is going to get above that key level, which is going to be major support at 52.30, and reinforce our reasoning for being long. Some other things that I like to do, Crude Oil Futures quote. I'm on the CME website, the Mercantile Exchange website. You can go and look at all the different contracts that trade oil. And what I want you to see is there's a ton of liquidity, not only in that front month, in the first month, but as you go back, 12,000 in April, 9,000 in June, December of next year, 8,000. December of next year, oil's trading at 53.88. Right now, it's at 51.46. These numbers will have to converge. Either we're going to rally up to 54, or 12 months from now, this price is going to come down. That's looking at the oil curve. If you want, you could just chart the oil curve. All I did here was I took WTI CL December 2019 minus the front month, February. So we're just doing December of 19 minus February of 19. So what is that? That's about 10 months or 11 months. This is the relationship. Back in July, they were trading almost $12 apart. Right now, they're trading about $2.50. I think this is going to continue to rally because I think oil is going to go higher, and I think that oil front month is going to catch up to 2019 December contract. Something very, very interesting to follow. All this is one contract minus the other, and this allows you to follow the crude oil curve. That's what I'm looking at, guys. Right now, oil got a bid lower, higher. Watch this major number, 52.27. If we get above there, oil's going higher. Let's get long oil futures. Or what I'm sharing with my members is companies that are influenced off the price of oil, and then we find options to best express our opinion, put ourselves in the best position, risk versus the amount that we can make, reward. Hope that helps. My name's Jonathan Rose. owner of Active Day Trader. Thank you for listening.